let's start the clock and think about some of the market themes then in just 3 minutes. And we need to start with, I think, the rebound that we saw in the United States yesterday and what drove that. Is this the market shrugging off, in terms of a global risk perspective in the very near term, the market shrugging off the sanctions picture and saying, look, you didn't go for SWIFT and you didn't go at energy, therefore we can rebound a little, at least in the short term?
I think that's absolutely right, Anna. The power of the rebound yesterday was really quite phenomenal. We must remember that looking at all the kind of past few military conflicts over the last 30, 40 years, generally they have been sadly buying opportunities. You've got to distinguish between the humanitarian issues here and markets. And when it comes to markets, normally these are kind of by the fact events when it comes to markets. The longer term impact here will be inflationary, and that will be a real negative later on this year. The question in the short term is, given the panic yesterday, do we have a tradable bounce for the next few weeks? Was the bounce we saw yesterday all we're going to get, and now we go back into risk aversion? I am in the camp, with low conviction, but I am in the camp that for the next few weeks we overall trade more positively in equity markets in a volatile fashion. We've got to remember that VAR limits are going to be cut, volatility levels have surged, and therefore people are going to find it harder to take risk. But overall, people are going to see that assets have got discounted. We must remember that Russia and Ukraine are not a particularly large part of the global economy, especially in terms of trade when you exclude commodities. And importantly, the sanctions have not included energy so far, and that is a really important separation.
Yeah, and that perhaps why we're also seeing then a rebound in some of the very heavily sold Russian assets that we talked about a lot yesterday. So the Russian stock index up by 22.5% right now. We see European natural gas falling as a result of the same dynamic.
I think that while I think that there'll be a tradable rebound for the next few weeks in global assets, I think in Russian assets it's going to be much harder. You've got to remember that most funds, most financial institutions out there are getting their limits in Russia cut. Some of them will have happened already, but many of them will play it over the next couple of days. So I still think there's going to be a lot of forced deleveraging in Russia. The players there are local markets. There's going to be less volatility. So you're going to see really, really powerful rebounds. Remember, the bear markets see the most powerful rebounds. The Russian benchmark index, even though it's up 20% today, or more than 20%, is still down 25% from a week ago, and that's very important.
Yeah, that's important. So you think the next few weeks we could trade more positively. Is that because we expect at least the commentary from central banks to be a little bit more restrained? Is that what you're anticipating?
I think that, yes, people will start betting that central banks will go a little bit slower. I don't think they can afford to go slower, given that how much the inflation problem and given how behind the curve they are already. I think they'll be forced into acting. But certainly, that's the latest impetus. We had a market that was very built up on rate hikes. Now they're suddenly going, maybe they'll come a little bit slower, and that will support equity markets that are suddenly much more discounted from a few weeks ago. So I think that is the theme we'll trade for at least a few weeks.
OK, so that's going to be something we focus on. It was interesting to see some of the Fed voices seeming to be in no hurry, perhaps, to change their tone, whereas the ECB voices, even the hawkish ones, reacting more quickly, maybe. The proximity clear there. Now, remember, you can get up-to-date analysis and insight from Mark and the rest of the Markets Live team. MLIV GO, that is the function to use on your terminal.